Go. All right, and we've reached 9 a.m. So hello and welcome to our SPAC market update. This webinar is kindly sponsored by Soho Advisors. My name's Claire Wilson and I'll be hosting and moderating the discussion today. So just a few housekeeping points to raise before we begin. So first of all, we're going to be recording this session, so I'll share the link with all of the registrants later this week. And secondly, we have the chat function up and running, so please feel free to post your SPAC related comments and questions. So I'm going to be introducing our super impressive panel of legal and finance experts shortly. But before I do that, it gives me great pleasure to welcome Frank Troise, our special guest, who will also be joining us today. Frank is a founder of Soho Advisors, the region's leading advisory firm for fintech, enterprise infrastructure, and SPACs. In his own right, Frank is a highly regarded expert in the SPAC space, and his views are often sought after as one of Asia's leading voices. Welcome, Frank, and I wonder if I may invite you to open up our event with a few words.
Thank you, Claire. You're very kind, and thank you to our panelists and attendees for today. For those who I don't know, my name is Frank Troise, and I'm the managing partner for Soho Advisors based here in Singapore. And we're very, very excited to host this next webinar today with all of you. As a means of a quick introduction, Soho began 27 years ago as a single family office in Montecito, California, and expanded to a multi-family office, asset management company, and merchant bank. In 2014, we opened our Singapore office with a focus on merchant banking, and today we have 24 people with our firm. I'm proud to say that our legacy in our senior management is that the majority of us have come from Donaldson, Lufkin, and Jenrette, and we've endeavored hard to carry forward that entrepreneurial spirit from DLJ and a focus on being a market leader. As Claire mentioned, today Soho Advisors is the leading strategic advisors for SPACs in Asia Pacific. Soho has the leading private company research and is the go-to advisory firm for SPAC sponsors and target companies. Following today's webinar, my team will be sending all of you who are attending today and all who registered our latest top 25 target list for SPACs in Asia Pacific, and we welcome your feedback. Finally, Soho will be conducting its second US-Singapore SPAC trade mission on July 13th. In addition to the US Department of Commerce, I'm incredibly excited to share that we will be announcing the leading US serial SPAC sponsor as our keynote speaker. This will be a tremendous opportunity to talk to the US's leading figure in this space. All of you attending today will be provided with an invite for the kickoff evening. Finally, I would be remiss if I did not thank our panelists today for providing their thoughtful input and guidance, our terrific moderator, Claire Wilson, and all of you for attending today. With that, Claire, back to you.
Thank you very much, Frank, and you're very welcome. So let me introduce our terrific panelists to you. Now, this is in no particular order because they're all equally impressive, but I'm going to start up with introducing Laura Leroy. So Laura is a partner at King & Wood Mallesons. She's based in New York, and her legal practice focuses on corporate finance, mergers and acquisitions, capital market transactions, and of course, SPAC transactions. So welcome, Laura. Why don't you tell us a little bit more about your background and your SPAC expertise?
Thank you, Claire and Frank. And hello, I am very happy to be part of this panel. You know, I've been all over the place over the years. I actually used to travel to Southeast Asia quite frequently as a financial analyst and later a marketing analyst for the former Westinghouse Electric company. I started my legal career in Silicon Valley, working on IPO matters for, at the time, probably the most known high-tech law firm in the world. And then I was in New York for 7 years and in Shanghai for 7 years. I joined KWM New York in late 2017. You know, in fact, the first SPAC deal I did was an Asia deal. I represented a few anchor investors in New Frontier, which was sponsored by the former financial secretary of Hong Kong, which was represented by my former firm. I first heard about SPAC was in the mid-90s, which was at the time a very obscure type of investment tool. The SPACs at the time were not listed on exchanges. They were OTCBB listing vehicles. So I personally really witnessed SPACs going a long way coming a long way from being a very obscure investment tool, maybe not really reputable, to now a mainstream investment vehicle. My credential in Southeast Asian market or Southeast Asian deals is primarily SPAC related work. I have worked with my colleague Nick Davies, who will introduce himself shortly, on the Grab SPAC. And we are still working on a few other deals in the pipeline for Southeast Asian companies. And also worked on a number of other SPACs and I mainly focused on pipes, as well as the de-SPAC transactions on the target side. So that's, I would say about, my credential in this particular panel.
That's wonderful, Laura, and we're very pleased to have you on board. Okay, you're welcome. Moving up next, it's my pleasure to now introduce Rajiv Vijendran. So Rajiv is the Regional Head of Investment Banking and Advisory at Maybank King & Group. He's primarily responsible for equity capital markets and advisory, and that includes transaction execution group, mergers and acquisitions, and strategic advisory. So Rajiv, perhaps you'd like to tell us a little bit more about your background.
Thanks, Claire. Hi, everyone. I've been involved in investment banking now for more than 25 years, having started up the equity capital markets business of Maybank back in 2009. We've been very fortunate to have been chosen by many of our clients to lead some of the largest IPOs across the region, including in March this year, we having successfully completed the largest IPO in Singapore, Aztec, which does design manufacturing for the tech sector. I've been very fortunate to be involved in two SPACs IPOs back in Malaysia, back in 2015, 2016, when it was the craze back then, and been involved in countless discussions with sponsors wanting to raise SPACs. So I'm really looking forward to today's discussion and the evolution of SPACs, not only in the US, but here in Singapore and Hong Kong as well.
Thank you very much, Rajiv. And we're also very much looking forward to discussing these issues with you as well. Also, on the finance side, it's my pleasure to introduce Michael Avila. So Michael's based in San Francisco. He's a senior advisor at Soho Advisors. Michael has extensive capital markets and exchange experience, and he was formerly the vice president and head of North America Capital Markets at Singapore Exchange. So Michael, welcome on board, and it'd be great if you could give us a little bit more information about your background.
Sure. Like Rajiv and Frank, I'm also an investment banker by background. I spent a little over 10 years here in Silicon Valley in investment banking at various firms, working on IPOs and M&A deals for a lot of the leading tech companies here. I focused mostly on the software internet space. I then was part of the New York Stock Exchange for almost 5 years. I was part of the global listings group over there, basically responsible for getting companies to list on the NYSE, as well as being responsible for NASDAQ transfers. That's sort of how I cut my teeth in the exchange business. And then, as you mentioned, most recently, I was recruited over to SGX, where I was the head of North America Capital Markets. I helped open the San Francisco office for SGX. And through my work with SGX is how I met the folks I met Frank and the Soho team. And so after leaving SGX at the end of the year, I joined Soho, and I'm happy to be working with Frank and happy to be part of the panel.
And we're happy to have you on board as well, Michael. Thanks. Okay, so it's also my pleasure to introduce to you Nick Davis. Nick is a partner at King & Wood Mallison's law firm here in Singapore. Now, the Legal 500 has recognized Nick as a rising star And Nick is not only a sought-after lawyer, but he's also called upon to give his expertise in shaping regulatory development, particularly in the fintech sector. So welcome on board, Nick. And also if you could share a little bit of information about your experience for us.
Thanks, Claire. Very happy to be part of this panel. And thank you, Laura, also for joining. We've been working quite closely together on some of these most recent SPAC deals in Southeast Asia. My background is really supporting venture capital and private equity investors in this region as we execute deals across Southeast Asian geography. And so it's been great to kind of connect that local expertise with the US capital market experience that Laura's had. And hopefully we can share some interesting insights throughout this panel. Thank you.
Okay. Thanks, Nick, and I'm sure you can. Great to have you here. So as you can see, we're in very good company today, and we have a huge breadth of experience across the legal and finance sector. In case you were late joining, my name's Claire Wilson. I'm a partner at Holland & Marie Consultancy, and for the next hour, I'm going to be moderating this webinar. Before we start, let me just give you a brief roadmap of our discussion today. So first of all, we're going to set a scene by reviewing the SPAC market in the US. And then we're going to dive right into focus on the position in Southeast Asia, because that's really what we're here to take a look at today. We're going to be looking at aspects such as the fundraising market and opportunities, timelines and execution risks, SPAC structures and legal considerations, and of course, the pipe. So hopefully we'll then have some time remaining to mention some of your comments or answer any questions that you might have. So please feel free to use the chat function below. So before we do dive into the Southeast Asian market, let's just clarify the current landscape in the US. Now, there's been a lot of noise in the media about this, and I'm going to turn to Michael. And I wonder, Michael, can you just sift through a bit of that noise for us? And perhaps you can tell us your top 3 key observations from what's been happening in the US markets over the past couple of months.
Sure. So as most people know, the SPAC market here in the US has been a rocket ship. So 2021 started off extremely strong, where in the first quarter, we actually had more SPACs than you had in either of the previous 2 years. So the interesting thing was, due to a few factors, new issuance of SPACs ground to a complete halt essentially in late April, early May, due to a few factors. A big one being, concerns around some of the SEC comments regarding their, how they want to treat warrants, as well as the treatment of forward projections. You had some mediocre performance of existing SPACs. You had some concerns about lawsuits, et cetera. But, if you really peel back some of the layers, the slowdown actually preceded some of the SEC announcements. And what you really saw was a shift in the pipe market, which also had some effect. So really, if you were to look at the sort of the top 3 issues and concerns, the first thing I would say is that, the uncertainty around the SEC comments around warrants is really clearing. That's expected to be really resolved over the next few weeks. Ultimately, treating warrants as liabilities is not incredibly onerous. Quarterly reviews, people realize quarterly reviews and being marked to market is not that burdensome or expensive. The second thing, and the larger issue really, is the concerns and the uncertainty around forward projections. Most people feel that if the SEC decides to treat SPACs the way they treat IPOs, that could have a real dampening effect on SPAC issuance. So many of the targets are less mature, with less meaningful historical financials, and they rely very heavily on projections to demonstrate the future potential of the business. So that's a really big one. And then finally, I would say it's the existing pipe market. So the pipe market, and not the SEC, is really the gating factor for success of a lot of the IPOs. And the slowdown has allowed some of the pipe investors to be a little bit pickier and rethink some of the high valuations targets have been getting. So you're starting to see a little bit of change in some of the structure of the pipes, more converts versus common stock. But overall, really, this is still, a target-friendly environment. And with so many existing SPACs looking for targets, pipe investors can be more selective. So, but this is things are really starting to pick up again I actually spoke to a service provider earlier today, and they actually have 130 clients who are SPAC clients waiting for the windows to sort of reopen and move forward again, 30 of which are expected to go forward in June.
Thanks, Michael. Thanks for breaking the ice there as well. I'm just going to move now to focus more on the Southeast Asian market. So I wonder, Michael, do you think that the US will remain an attractive destination for Southeast Asian SPACs?
Yes, definitely. I think that, the US has, been, the dominant market for SPACs, and the US regulations are by far the most SPAC friendly. However, if, there seems to be sort of a regression to the mean, if, things sort of the restrictions and the regulations get tighter in the US, I just think there's enough demand and enough interest from sponsors that they'll just look for alternative venues. And so even though the US has dominated, had been the dominant market for SPACs, it's not the only market. Europe has been fairly successful. The Amsterdam's Euronext has probably been, the next most popular listing venue, but there are going to be opportunities that are still going to remain for Asian sponsors, and as well as for other exchanges. SGX is moving forward with their listing framework, and you have the UK rushing to relax their restrictions to be more US-like, and you have Hong Kong and Indonesia moving forward with their SPAC regime as well.
Great, yeah, and I think that's a really key point as well that I'd like to throw over to Rajiv, because as you pointed out, Michael, we know that very shortly that Singapore and Hong Kong will be launching their own SPAC regulations. So how do you think that will impact upon Southeast Asia, Rajiv?
Claire, a lot of it will really depend upon the SPAC regulations when they're finally issued by both countries. So for instance, with the SGX and industry players, it looks like the SGX is likely to follow broadly the US regulations on SPACs, with some minor tweaks around potential minority investor protection. I understand that Hong Kong is probably taking a slightly more conservative approach, and which could result in a de-SPAC process being no different from an RTO effectively. And that would really dilute and devalue a lot of the value that a de-SPAC brings as part of a transaction. I think one of the largest concerns that ASEAN fintech companies have is really, do Asian investors and ASEAN investors in particular really understand fintech valuations? And to be honest, that's not really been tested. And I think the Bukalapak IPO in Indonesia later this year will be a good test of that. So my thoughts are that the larger ASEAN fintechs will still gravitate towards a US IPO. That's a proven SPAC market and a proven fintech valuation market. But over time, potentially the smaller fintechs, sub 5 billion valuation, could potentially find homes in SGX. And as the valuations are tested and proven in Southeast Asia, clearly targets will want to be listed closer to home.
Yeah, thanks, Rajiv. And that makes sense. And I'm just wondering if you could tell us a little bit more about the fundraising opportunities in Southeast Asia and here in Singapore. And in particular, in your opinion, are the opportunities in Southeast Asia sufficiently attractive to boost the SPAC appeal?
Claire, there still remains a very significant pool of liquidity in Southeast Asia. Now, whether that's institutional money, sovereign money, high net worth money, family offices are opening up in record numbers in Singapore. So there remains a lot of liquidity. If you look at the equity capital market space in 2020 and 2021 in Southeast Asia, it's been a record. You've seen record issuances in Thailand, Philippines, Vietnam over the years. So there remains plenty of liquidity. Now, the problem for a lot of the Southeast Asian investors is they've had no access to fintech, to investing in fintech, the SPAC market, and the whole tech boom. So I think, when the opportunity arises, a lot of this money will gravitate to a lot of these opportunities.
Okay, great. Thanks for that information, Rajiv. Just moving now on to Nick. So what about from the deal perspective, Nick, and how relevant is the SPAC model for Southeast Asia?
Yeah, I think it's a huge development for Southeast Asia in terms of being a new tool in the toolkit for existing investors, shareholders, strategic investors, the whole gamut. If we look from the kind of supply side of the shareholder base in these companies, the de-SPAC transaction, in other words, the transaction where the SPAC itself merges or acquires an operating company, that provides a whole new exit regime for existing investors. But I think what we're also seeing in Southeast Asia is that this is not necessarily kind of the big bang IPO, that's it, that the company has matured. We're also seeing, I think, this is another step in the fundraising journey. And we've seen that, I think, in some of the Southeast Asian SPACs that have launched. There are still going to be quite large shareholder base, existing shareholder bases still left intact after that SPAC opportunity. And so I suppose what we see is that the de-SPAC obviously allows an earlier IPO. There's no doubt about that, and launching on the US market is particularly attractive. But it also kind of heralds a way for a kind of more measured, perhaps, development under a listed regime. So it's really going to be interesting to watch in the next few years. But I just wanted to kind of open it up to Laura as well, because when we talk about the US SPACs circling Southeast Asia and looking for a particular kind of target size, I think that does start to kind of put some constraints on the types of deal they're looking for, just on the basis of what looks attractive to be listed. So maybe Laura, do you have some thoughts on that?
Sure, and that's a very valid point. Deal size is driven by generally exchange rules, meaning NYSE and NASDAQ rules, as well as your normal commercial considerations. Historically, NASDAQ was the exchange of choice for SPACs, but NYSE also stepped up its efforts in the competition, I think since 2017, by amending its rules so that it's on even footing with NASDAQ. In fact, I believe in last year, I believe SPACs listed on NYSE probably raised more money than those listed on NASDAQ, although the number of listings on these two exchanges, the numbers are pretty close. In this discussion, I tend to mention NASDAQ more often, but you just keep in mind NYSE has a lot of similar rules when it comes to SPACs. In terms of deal size, NASDAQ rules require that the SPACs, 90% of the gross proceeds raised in the IPO and any concurrent sale of equity securities to be deposited in a deposit account. And a deposit account can be a trust account maintained by an independent trustee, or it can be an escrow account maintained by an insured depository institution, which is a defined term, which I'm not going to go into details about now. And as we know, the SPAC is formed for raise money for the purpose of making acquisitions, right? And the exchange rules require, for instance, the NASDAQ rules require that the initial business combination must have an aggregate, fair market value of at least 80% of the value of the deposit account, meaning 80% of the IPO gross proceeds, but that excludes any deferred underwriter fees and taxes payable on the income earned on the deposit account. Here, the SPAC's underwriting fees are structured differently than the traditional IPOs. In SPACs, the underwriters get paid initially generally 2%. After completion of the IPO, and then later on 3.5 after the de-SPAC consummation. There may be some variations, but generally, that's the case. So that's the rule requirements, but in practice, the IPO raise in a SPAC is typically 1/4 to 1/3 of expected enterprise value of the target. This is to minimize the effect of dilution that the founder shares, which will generally account to 20% of the post-IPO company. It's to minimize that effect. So let's see, you know, a smaller SPAC between 100 million to 300 million. They would be looking to do deals with targets or multiple targets with a combined, if there are multiple targets, enterprise value that is 3 times to 4 times valuation of the IPO raise. So, and I want to give you a little bit of information of the recent trends in terms of the industries that, you know, the SPAC boom has the highest concentration, which are tech. I think we are not surprised, right? Tech industry. Then you have financial services, healthcare, and followed by business services, leisure, hospitality, and entertainment. And the energy and also consumer industries are on the rise. So now we circle back to Southeast Asia, right? In terms of whether SPACs can go mainstream in Southeast Asia, you would look at the volume of suitable targets here, right? You know, how many are willing to go public, and you know, it takes some time for them to actually get familiar with SPACs as a business model. And then also in the 400 million to 1.2 billion range, valuation range, how many targets are in that range that are also close to significant profitability and also have an interesting story to tell to the US investing public. You know, but in our firm, I work with Nick and some other partners on South Asian deals, and I support their transaction on the U.S. securities law side. We've been busy on a few, but Nick keeps saying that he's not sure how many more companies of this profile there are left in the tech and all these other industries. So.
Yeah, I mean, there's a lot of low-hanging fruit. Obviously, it's to be picked, and that meets these criteria. But as you say, Laura, you know, there's still there are a whole host of other companies out there which are profitable or approaching profitability. The question is really, can people put together that deal to take advantage of that huge wedge of cash that a SPAC can bring? Because I think the SPAC can really transform Southeast Asia. It can help to start to defragment this market. We're seeing a lot of kind of national champions, but not necessarily regional businesses. And so I think that the real question will be, you know, can SPACs be a market changer in that perspective?
Yeah, I mean, thanks, Nick and Laura. It certainly sounds like SPACs can be a real catalyst for Southeast Asia. And I mean, if we look across at the US and Canada, SPACs seem to be accelerating the pace of corporate evolution. And then just swinging back to Michael, perhaps you could add a few perspectives on what you've seen in certain sectors in North America.
Sure. So it's pretty interesting, right? So if you look at the US as the most mature, most active market for SPACs, a couple of things that you'll notice right away is that the deals tend to be very large, right? They're billion-dollar plus deals, in many cases, multi-billion-dollar deals. And a large majority of them, you know, happen to be in the tech space. So that, you know, may not necessarily be, you know, that might be something that, interesting enough, is sort of might be unique to the US. And it doesn't necessarily mean that SPACs in Asia have to sort of follow that rule. The fact is the US has some very unique market dynamics that has, you know, contributed to some of these dynamics. You have tech companies, if you look at the dynamic in the IPO market over the last few years, you have a situation where basically only unicorns are getting public. You know, 3-4 years ago, even as 3-4 years ago, the average market cap of a venture-backed tech IPO was over $1 billion. Through May of 2021, the average market cap for a tech IPO is now over $10 billion here in the US. I mean, it's astronomical. So you have a situation here where, you know, the tech sector is almost ideal for SPACs. You have very large, very mature companies with investors and employees in need of liquidity. The companies have been staying private much longer and are getting bigger. And you have VCs, right? These are 10-year funds with 1-2-year extensions. And there are a lot of these companies that have been private for more than 10 years. So it's interesting when you look at, according to Crunchbase, for example, of the 62 venture-backed companies that have gone public in 2021 via SPAC, only 5 have valuations of under $1 billion, and the 2 smallest are actually in the biotech space. So you compare healthcare, for example, and tech, and it's interesting, the IPO market for healthcare companies is nothing like for tech. You still have phase 1, phase 2 biotech companies that are pre-revenue going public, and going public every week. And so not surprisingly, you don't see as many SPACs in the biotech space. But you look at some of these deals that have been done. 23andMe was founded in 2006. SoFi was founded in 2011. LiveVox, one of the smaller deals, was founded in 2000. So you have these private venture-backed companies that are 10, 15, in some cases 20 years old. These are perfect SPAC candidates. Anywhere where you have fairly mature companies with good growth prospects and investors and employees in need of liquidity, you have interesting SPAC targets. In the US, that happens to be, tech happens to be full of them. As we've pointed out, in Asia, that might not be the case, right? So you don't have as many unicorns, and you have, other sectors that also have, mature companies with good growth prospects. So it'll be interesting to see how this dynamic, unfolds in Asia.
Yeah, that's a great insight into the market, Michael. And I just want to take a brief kind of swerve from there to look now more at the transactional element, and talk about the documentation needed to actually start the transaction. So for example, looking at the letter of intent, or the LOI, as it's known in the industry. So Michael, I know that there's quite a lot of work to do for a SPAC to put an LOI in place, to tie the loose ends together. So in your opinion, what are the essentials for this?
This all goes back to sort of IPO readiness, right? And an IPO readiness sort of assessment, and the judgment both from the sponsors and the target is, look, are you ready to be public? Because if you really, a SPAC is an alternative IPO. The de-SPACed entity is going to be a public company. And so I think one of the things that people have to keep in mind, particularly if you're an Asian sponsor, if you are doing this in the US, like if you decide to list on SGX when they're ready to list SPACs, it might be a different story. But you have to consider you're going to be a public company, and you're going to be a public company in the US with US sector comps, right? So if you're a software company, how do you compare to a Snowflake or a Palantir? If you're a gaming company, how do you compare to Roblox, right? If you're an internet company, how do you compare to Airbnb or DoorDash, right? You have to think about, what your comps look like, and, how you compare to those companies. Sell-side research is important. Do you have a story that's interesting to analysts? Will they want to pick up coverage? From a, maturity standpoint, do you have relevant metrics and KPIs in place that are predictable and achievable? If this is a growth story, what are the growth rates? If this is a yield play, what are the yields? So the fact is, you have a very short period of time in which to get your house in order to be a public company. And some of the stuff can be done after the LOI, but once the LOI is in place, you have maybe 3 to 5 months. So if you really look at this, a lot of this stuff has to be in place before the LOI. I've seen a lot of companies that seem to think that they're interesting SPAC targets when they have single-digit revenue, modest growth rates, an incomplete management team, no corporate processes or infrastructure, or a single product that's out of beta testing. In many cases, that probably is not an entity that's ready for an LOI and to start a SPAC process.
Yeah, good points there. And I think that's a great segue to look at the legal element as well. And I'd just like to turn over to Laura, just to ask, in your opinion, do you see that the LOI process could unfold any differently in Southeast Asia as compared to the US?
I think the regional difference is a lot. It goes a lot to along the same line what Michael was saying, is the familiarity with the type of deals and IPO readiness, right? But beyond that, you know, it's just like any public merger. Typically the first step is to have a LOI. It typically deals with the structure, the price. It typically, you know, deals with certain deal protection mechanism. You have exclusivity, then you have confidentiality. Basically, it outlines the whole, you know, how the deal will be done. And so from that perspective, I don't think it's truly that remarkable. But we, you know, Nick and I have, you know, dealt with clients and, you know, ongoing. Somehow, you know, it's just feel like it's more difficult than you expected. So I think a lot has to do with people, you know, sort of learning the rope on how this SPAC and de-SPAC, and because a lot of the issues are driven by the U.S. securities law. It's very peculiar, right? So suddenly they have to ask more questions, and suddenly I am answering questions that I didn't expect from like a U.S. client, because they are already familiar or somewhat familiar with this type of questions. So in terms of the specifics, I wouldn't go through anything that's just usual in a LOI, but for SPACs, you would see, you know, generally the pricing is flexible in a sense. It could be cash or share or mixture. The pricing generally may not be fixed. There may be a true up after the closing. And because SPAC is very, you know, very unique in a sense, the SPAC is a shell company with its assets as cash, and the cash is locked up in a deposit account. So you really can't go after, the target can't really go after the SPAC if the deal fails, you know, so you don't really have a lot of recourse if something goes wrong. So, you know, I will turn it to Nick to talk about the more Southeast Asian element.
I mean, I think it's an interesting point you raised about you know, target companies in this region getting savvy on US stock listing rules requirements. But I think it's also important from the SPAC's perspective. You know, it's been a little bit of a target companies market, and so terms in the LOI have become quite loose. SPACs have been willing to promise various things such as committed funding, you know, which in the context of the PIPE market can be quite problematic later. But that flexibility, you know, sometimes I think does see deals kind of come off the rails in terms of the timing. As we've discussed, it's quite a short window of opportunity to get from LOI to complete the de-SPAC. If there's too much flexibility given to the target company to actually construct the deal, I think there can be quite a few curveballs that come into that process and potentially derail it. So, you know, to Laura's point, yes, the SPAC is a shell company with a lot of cash, but in some ways, when they approach Southeast Asia, perhaps they should be looking at a little bit more at this like institutional capital or investors, you know, and I think that's the shaping force. You know, we haven't seen necessarily a huge influx of private equity in Southeast Asia kind of doing that consolidation across the region. Some of these SPAC prospectuses, they do talk of similar terms of this kind of Southeast Asian vision. And the returns for US investors as a result of that. But I suppose we're not quite seeing that in the deals, you know, how that's being constructed.
Yeah, but we have seen, you know, they are looking for strategic investors to put in more stake in the company. So yeah, from that, we are also gonna touch upon, you know, in terms of, even though it's a target market, right? But still the targets have to be prepared on, you know, certain issues, like they need to think about how they how they need to preserve their existing, you know, strategic relationships. but keep in mind the target will be a surviving company. So generally speaking, their relationships will be intact, except, you know, you have to look at you have to be mindful of change of control provisions, how that would impact your, let's say, your licensing arrangements, how that would impact, you know, your collaboration, you know, things like that. So even though the entity still exists, but you do need to do some legal analysis as to whether specifically certain agreements would be impacted. Yeah. And you would also think about, you know, whether post de-SPAC, all these investors would have, you know, filing obligations. And then you also need to think about, you know, in the process, what kind of disclosure you want to make, forward-looking projections, which is, you know, for SPACs, which are quite standard because of the you know, of the safe harbor rule under the US securities law, which doesn't apply to a traditional IPO. But, you know, this may be changing. So I think Michael at some point is going to talk about that. So I'm not going to go into the details.
Thanks, Laura, and thanks, Nick. And I know that that's just the tip of the iceberg, but I hear loud and clear from you that there's a lot to get through, particularly within a very short period of time frame for execution. So I wonder now if we could turn and look more at the timeline and those execution risks.
Nick, you want to start?
Yeah, sure. Look, I think, you know, people see signing the LOI as everything's been done. I think as we touched on, you know, what we're seeing is people still really haven't done their homework at the time of signing that LOI, particularly on the shareholder base of these companies. And I think it's probably slightly more peculiar to Southeast Asia that you have a lot of family, maybe offices, conglomerates, strategic investors, multinationals. You know, there's quite a different and diverse shareholder base on the basis that, you know, people were looking at investing in tech companies or platform companies as a basis of distributing their products and services across Southeast Asia. They all have a vested interest in the success of the company, and therefore that kind of takes it back to some of the earlier points we were making, that, you know, the IPO isn't the be all and end all. You know, it is just the next stage, and a lot of these investors want to stay part of that. They want their strategic collaborations to stay intact, and also that means that they're also looking at the SPAC differently. They're not looking at it as a means of exit or liquidity, instant liquidity. You know, they may also want to participate in the pipe to increase their shareholding. So this brings like a number of different kind of nuances, I think, to a de-SPAC transaction that, again, can pose some curveballs if they haven't been thought about before. And so I guess what we're really suggesting is that before you get to LOI, both on the target company side and on the SPAC side, you know, have a bit more thought around the particularities of Southeast Asia and how you can bring these factors to bear to really make sure that the transaction is investable and successful in the US.
Yeah, thanks, Nick. And I think that the key takeaway from this is that there is a real and urgent need to be able to work against a ticking countdown, right? And with that in mind, let's move on now and let's focus on how best to work through all of these issues. So how do we get those deals over the line for SPACs and the targets? And perhaps, Laura, I wonder if you could walk us through some of the key legal considerations in structuring a SPAC.
So are we talking about the structure of the SPAC already?
Yeah, so yeah, thinking about that structure and again, from a legal perspective.
Yeah, so you know, this may not be the whole universe of the structures, but I'm talking about based on our personal experience, what we have seen. And, you know, the structures are generally tax-driven. Sometimes it's also an incentive to structure the post-de-SPAC company as a foreign private issuer. I haven't gone into this too much, but it's really important to understand this foreign private issuer concept. But before I get to that, there are generally what we see commonly three structures. You have the traditional reverse triangular merger. Basically, SPAC will form a merger sub, and the merger sub will merge with and into the target, with the target to be with the target being the surviving company. So that's your traditional way. And then you have what we call double dummy. So basically, a new company I think most people sort of, it escapes them. But basically there will be a new company that's formed. This new company will form two merger subs. One will merge with the SPAC, one will merge with the target. Okay, so the new company then will become the listing company. Okay, and the SPAC shareholders and the target shareholders will both exchange their shares, unless they are cashing out, right, into the shares of the new listco. The listco will be listed after the de-SPAC transaction. And the third thing, it's less common, but I've seen a couple, is what we call maybe single dummy, because you only form one merger sub and then merge with the SPAC. Also, there will be a new entity. That's the holding company. That will be the new listco. But the key takeaway point is the target will be a surviving company, and it will therefore become, a public company. So that's generally structure.
Mm-hmm.
I think, your point, Laura, was that this is really a US tax-driven construct. And then when you start deploying US SPAC structures outside the US, say in Southeast Asia, that really brings in the tax considerations of the shareholders. We've had deals where shareholders are really falling over themselves to participate and swap their shares out into the de-SPACed entity, but then they realize that under their domestic tax regime, that could trigger a windfall tax, which would make the deal completely unprofitable. And I know, Rajiv, we've kind of swapped messages on this in the context of Indonesia, which is particularly problematic in terms of the tax regime. Did you want to mention something around that?
Yeah, thanks, Nick. One of the key considerations for any sort of sponsor as part of an exit is clearly valuations, and the tax implications to them as part of that will feature very prominently in part of that discussion. So Indonesia has some very unique sort of tax regulations where if you sell a private company, the sponsors are subject to a 25% capital gains tax. And if you can imagine a tech company, the book value is going to be very low relative to their final exit price. Now, there is an exemption, though, that if the company does list on the IDX, he is then subject to a one-off founder tax of 0.5% of the value of the company at IPO, plus a further 1% tax on whatever amount of shares that they sell. So there's clearly a very significant financial incentives for target companies to list on the IDX first before considering some sort of de-SPAC exercise. Now, I think the challenge for us is really, how does a US SPAC now acquire a company which is now listed on the IDX? And I'm sure if you, Nick, and other tax advisors spend some time on it, you'll come up with a novel solution on how to solve this.
Yeah, SPAC's obviously nothing new. As Laura says, this is SPAC version 2.0. I'm sure if we look back in the past, in the context of China, there were a lot of SPACs based around SPACing economic interest. So not even an underlying ownership interest in the company. Now, the real question, and going back to, I guess, what Mike was saying originally around market dynamics and whether the market is supporting some of these exotic structures is really, can we sell that to investors? We can go through the complexities, we can make it happen from a tax and legal perspective, but does it just look too bizarre at the end of the day to be workable? So I think similar problems in India, Vietnam as well. These are obviously hotspots for investment, but can the SPAC really be used to kick off that transaction, or should that just be another step in the de-SPAC process? So 1 year, 2 years down the line, should we be bringing in the other more problematic regions as part of that consolidation play that a SPAC can facilitate in Southeast Asia?
Okay, thanks, Nick. Thanks, Rajiv, also for bringing in those considerations. Really interesting to hear those perspectives as well from around the region. Now, a SPAC webinar wouldn't be quite complete if we didn't talk about the pipe. So let's go to the pipe now, and let me turn to Michael. So Michael, what do you think? Do you think that Southeast Asia is an oasis of opportunity?
Yes, I do. And the pipe will be an interesting piece of it, right? So the pipe market in the US for SPACs is very established and very mature. The underwriters and the sponsors, know whose doors to knock on when it comes time to find PIPE investors. And, in the more recent developments, unlike SPAC 1.0 in the US in 2008, 2009, you have some traditional institutional investors like Fidelity and T. Rowe Price participating in a lot of these PIPE financings, not just hedge funds. You even have other institutional investors like Koch Industries, not Coca-Cola, the soda company, but Koch, K-O-C-H. They actually have, I think it was on the order of $100 million now invested in SPAC pipes. So I think the interesting dynamic will be to see how this unfolds in Asia, because the pipe market for SPACs in Asia is, I think, still unproven and represents more of a question mark, right? And I think there are some interesting questions, right? Given the traditional conservatism of many Asian investors, what does this mean for SPAC deals in Asia, particularly for less mature companies or companies that may be perceived as riskier investments, right? What does that also mean for the valuations for these targets? In the US, people are much more accustomed to higher valuations. And when people talk about 15, 20 times revenue, everybody's seen that all before. In Singapore, you start talking about 20, 50 times revenue and people pause. So the other thing that'll be interesting is, pipes have been a very critical component for getting a lot of the US SPACs done because they're billion-dollar and billion-dollar plus deals. Given the fact that the universe of target companies in Asia is smaller, right? You have a more limited number of unicorns. It'll be interesting. You may not require, if deals end up being smaller than the US, then pipe financings and large infusions of additional capital to close the deal might not be as important.
Yeah, great points. And I mean, I'm just going to turn it over to Rajiv, just to ask Rajiv, did you have any further perspectives from Southeast Asia?
Yeah, Claire. So Mike's completely right. I think Asian investors have historically been very conservative. And as a result of that, they've really missed the boom that's happened in the sort of tech space over the last 10 or 15 years. And, if you just look at the amount of sort of Asian strategic money, ASEAN institutional money, family offices available, I think there's tremendous opportunity on the upside for pipe activity, coming out of Southeast Asia for US banks. I mean, you just look at the Grab deal. PNB out of Malaysia was a significant pipe investor. The likes of GIC and Temasek, Khazanah and EPF out of Malaysia have been significant investors in sort of fintech and tech opportunities in the US, mainly in the private space. They haven't been that active in the public space yet. But I think over time, I think they will become more and more active in this space, seeing that they have missed a lot of opportunities in the past in this space.
That's great. Some really good regional perspectives there. And I think that's an appropriate moment to take a pause here. Because I would like to thank our participants for their comments and also for their questions. And I do actually have some questions from the audience. So I'd like to present those just generally to the panel. So now I'm just going to select a couple because I am quite conscious of time. So thanks to you participants for posting these, and apologies if I don't choose your question. But I'm just going to go ahead and choose a question here from Paul Yang. So thank you, Paul. Paul's asking, are there any statistics to show the number of SPACs still looking to de-SPAC in the US?
Yes, actually, there are actually quite a few. There's a few websites, and I'm drawing a blank right now. It's like SPACresearch.com, I think, is one.
Yep.
They all have SPAC in them, right?
Yep.
Like SPAC Insights or SPAC Research, SPAC Insider. That have statistics, but generally what you're seeing right now is with over 500 SPACs that have been done over the last few years. Currently, I think the number is still over 400 existing SPACs still looking for targets. And again, as this backlog that exists, unfolds, that number could go up pretty dramatically.
Awesome. And just following on from that. Sorry, Laura.
I'm
Go
sorry,
ahead.
maybe I read too much into this question. It says look into de-SPAC in USA. So I'm like, what do you mean de-SPAC in USA? Are you talking about a US target? If that's the case, then you wouldn't have the statistics. You don't know what the SPACs are thinking, what they are looking for, right? Just because it's US SPAC doesn't mean they are necessarily looking for US targets. So maybe what Mike is explaining is the question, but just so I as lawyers, probably that's our professional issues. We read too much into everything.
That's why we have you here, Laura, to focus on the final details, because the devil's in the detail, right? So, and just moving on from that, also we have another question regarding the industries that the SPACs are looking out for, especially now turning to the Southeast Asian marketplace. So
maybe I can just reiterate what I said earlier based on some recent surveys among investors, funds. They either have done SPACs or a couple of SPACs, or they are interested in doing SPACs. The hardest area is tech, and then you have financial industry, and you have healthcare, followed by business services, followed by I don't remember the other one, but anyway, so the energy and consumer industries are on the rise. I would presume that's going to be similar, unless Southeast Asia has different landscape, and your other industries prove to be with high growth. But otherwise, I would think these are the industry with high growth, and this would be industries that SPACs would be looking into.
Super.
I would echo that. So I think if you look, right, most of these SPACs are U.S. sponsors, right? So there is sort of a U.S. bias, right? And if you look at the documents, right, and you look at the areas that the SPAC specifically says they're going to focus on, they tend to be the big emerging growth sectors, tech, healthcare, et cetera. So I think what will be interesting, though, will be if you start seeing more non-US sponsors, right, Asian sponsors, Singaporean sponsors, will they have that same bias, right? So given that US folks realize that there's a huge universe of targets in tech, it's natural that they form these SPACs looking at tech companies and a tech universe. But that might not be the case as things mature.
Absolutely. And I think Rajiv will remember, I guess the Malaysian SPACs will focus more around oil and gas in recent years. There is a lot still to be built here in Southeast Asia. A lot of infrastructure, whether that's tech infrastructure, hard infrastructure, all this can be SPACable as long as it meets the metrics that Laura kind of touched on earlier. So I think there is a lot more that the SPACs could be looking at in this part of the world than necessarily the kind of narrow window that Mike touched on and Laura touched on in terms of what's successful in the US.
Yeah, if I could just add to what Nick and Mike and Laura said, I think, because of the founder share dilution, I think, most SPACs are looking for any sort of company which has got this hockey stick type of growth. Without that, I think it's going to be very difficult to sort of justify an acquisition if you've got the sort of run-of-the-mill 5 to 7% growth. So any sort of business that typically would in a high growth sector, something new where you've got this hockey stick kind of revenue and sort of profitability opportunity, that would definitely work. And over the last 5 to 10 years, that's typically been in the tech space. But I'm sure there's a lot of other companies which have that similar sort of characteristics.
Okay, thank you so much. There's so much to talk about, but so little time to do it. And I can't believe that the hour has almost passed. So guys, I'm sorry, it's time to start wrapping up. Now, before we do, maybe I could ask each of the panelists just to quickly summarize what you believe is the biggest challenge or opportunity for the Southeast Asian SPAC market. And who wants to go first?
I can go first. On the challenge, I think, to raise SPACs in this region is still going to be problematic. I think the public markets here don't necessarily support, even with rule changes, they don't necessarily support the large capital raises that are required to actually form a SPAC in this part of the world. But in terms of deployment of SPAC proceeds, whether that's from those that form here or from overseas, particularly the US, I see that as a massive opportunity to catch up in terms of getting into the hot investment area of Southeast Asia. As we know, this is one of the few places left on Earth where there hasn't been serious capital invested from outside the region. So that I think is the greatest opportunity, and all the players, whether it's PE, VC, sovereign wealth funds, they can all come together as part of these transactions and get the particular returns that they're looking for.
Yeah, I'll pipe in. I think, in general, I think that most people feel that the SPAC boom is still pretty exciting, and even if it slows a bit, like it has been, it's not over. So I think there are still a lot of interesting opportunities for sponsors, and in Asia, Asian sponsors with a knowledge of the market of Southeast Asia and the startup ecosystem here have a distinct advantage over US SPACs who lack that knowledge and that established network of finding interesting companies. So the other thing is, there seems to be a very meaningful universe of interesting targets worldwide. I mean, the number of unicorns continues to grow, and it's growing faster than ever. Interestingly enough, China has a huge number of unicorns, right? The second largest number of unicorns outside of the US, and yet very few of them have been involved in the current SPAC market. Very few of them have been targeted. Now, I think there are some other reasons for that, but the fact is, I still think that there's a lot of interesting opportunities in the SPAC market and for SPAC sponsors.
Maybe I'll just follow on. I think from a Southeast Asian perspective, the challenges are going to be investor education, really getting people to understand, the opportunities and why a SPAC could work and not go through potentially the IPO route. I think the second is going to be regulations. And that hopefully will be cleared up over the next sort of 4 to 6 weeks as Singapore comes up with its regulations, and Hong Kong in the next couple of months. I think in terms of opportunity, as I mentioned earlier, I think there's plenty of capital looking for these kind of, for fast growth, high tech, fintech kind of opportunities. And there's plenty of targets in Southeast Asia, which have grown over the last 5 to 10 years with a lot of private equity and venture capital money, which now are looking for an avenue to be able to monetize. Now, I would say that a lot of these targets in an ideal world, maybe not necessarily the 30, 40, $50 billion valuation companies, would like to be listed closer to home, partially because of brand recognition. It's a Southeast Asian play or an Indonesian play or Vietnam play. Will I really be understood in the US? I think the Grab de-SPAC will be an interesting one to look at how it, not only the fact that it gets done and being the first sort of fintech to sort of, get done in via US de-SPAC, but also how it trades in the aftermarket. I think for a lot of US IPOs of Southeast Asian companies, getting an IPO done has always been relatively easy. But what happens post-IPO? You have research coverage. Can you trade? You have to, does it trade on appointment? And I think it'll be interesting to see, how Grab does, and that will set the platform up for future deals in the US.
Okay, so I don't really see as like a challenge. I just see people now see this as still some sort of a novel investment vehicle, but eventually it will become so established. It's just one of the, investment vehicles. Based on the surveys I have come across, it's predicted that the boom will still go through maybe the end of 2022. But then the regulations are coming, as we have discussed, the SPACs may not be afforded safe harbor protection anymore in terms of forward-looking, in terms of projections, So this may all play into, how SPAC will be. Plus, there are competing investment vehicles nowadays, NYSE and I think NASDAQ as well. Now they are allowed to do primary direct listing without underwriters, right? So in the end, it's just going to be one of the, mainstream tools, in my opinion. It's just right now we are on the ascension to get there. That's why there's so much attention.
Thank you. Amazing insights from you all there. And I'm sorry to break up the party, but we've gone 4 minutes over. So it's been a great discussion. Thank you so much, Nick, Michael, Rajiv, and Laura, for your incredible insights. I've thoroughly enjoyed it. And also thank you to our audience for joining it. I hope you've enjoyed yourselves too. I'd like to say a special thanks to our team at Soho Advisors for working incredibly hard behind the scenes to make this event happen, particularly late last night and early this morning. And please keep an eye out for future announcements and publications. So until next time, stay safe and have a great week.
Thanks, Claire.
Thank you.
Thanks, everyone.
Thank
Bye-bye.
you.
Guys.